Hi, Brock VandenBerg, Fund Manager for TaliMar Income Fund. Today, wanted to share my thoughts on the rise of the private credit industry and how it's impacting the real estate private lending industry. So let's go back to 2008 for a little context. After the 2008 financial crisis, regulators stepped in with a broad range of reforms to stabilize the financial system. Laws like the Dodd-Frank Act and global frameworks like Basel III imposed tighter lending standards and capital requirements on traditional banks. These reforms served their purpose. They made banks safer and reduced risk in the system. But they also made banks less flexible. Many pulled back from the types of loans that carry more perceived risk. Think construction loans, bridge loans, investor-backed real estate projects, fix and flip loans. That created a large and growing gap in the market, particularly for short-term capital needs. This created a demand, an opening for the private credit industry. Private credit refers to lending that essentially is made outside of the banking system. Instead of banks, these loans are made by private funds, asset managers, or even direct lenders. These are funded by institutional investors, insurance companies, family offices, and now increasingly high net worth investors. The growth has been substantial. Private credit markets are on track to double in size, with projections reaching over $3 trillion globally, according to Moody's. This capital is flowing into a wide range of sectors: corporate finance, consumer lending, infrastructure, and significantly, real estate. So what does this mean for the private real estate lending industry? For real estate investors, the pullback from banks has created both a challenge and an opportunity. The challenge is that it's harder to secure fast, flexible financing through traditional channels, especially for non-owner occupied residential and small balance commercial projects, or even ground up developments. These are all types of loans that many banks cannot simply make anymore due to banking regulations. The opportunity is that private lenders, those operating under the umbrella of private credit, have stepped in to offer capital with greater speed, creativity, and understanding of asset-based risk. Private mortgage funds are one of these vehicles. They pool investor capital to make collateralized real estate loans, often with terms and structures that banks can't or won't accommodate. This has direct implications for fix and flip investors who need acquisition and renovation financing, developers looking for short-term capital while waiting on permits or construction draws, borrowers with equity-rich but cash-poor properties who need transitional financing. So why are investors paying attention to this? From an investment perspective, private credit, especially when backed by real estate, offers a few qualities that are becoming harder to find in traditional markets. Think stable contractual income, lower correlation to public equities, tangible asset backing, especially real estate as collateral, and in many cases, risk-adjusted returns that outpace more traditional fixed income investments. This doesn't mean it's risk-free. Like any credit investment, there's exposure to borrower defaults, market cycles, and asset valuation shifts. But the real estate collateral often acts as a buffer, and well-managed funds typically use conservative loan-to-value ratios in strict underwriting. So is this a trend or is it a fad? It's important to see the rise of private credit for what it is, a structural evolution, not a short-term trend. The regulatory environment that pushes banks out of certain lending spaces isn't likely to reverse. At the same time, borrower demand for flexible, short-term capital remains strong, particularly in fast-moving real estate markets. So private credit isn't just a new way to deploy capital, it's increasingly how real estate capital gets deployed. So hopefully this gives you a little insight into why private credit has expanded for real estate lending and why the future is wide open for the private lending industry. If you're interested in learning more about the private lending industry or interested in learning more about the Mortgage Fund, our platform that lends to real estate investors, feel free to reach out to me or my team. We'd love to chat with you about it. Thanks for listening.